We think that the BOJ will give it a little bit more time, just weigh the impacts of the July hike, look at the inflation numbers through this autumn, and then maybe make the hike decision in January. So we're not expecting anything in the upcoming meeting, but I think that's also largely expected.
Given what you've said about, the earnings results in relation to Japanese banks and the fact that we are seeing these solid returns, what do you see as the biggest risk for these banks going forward? Is it the US economy and the outlook there?
Yes, to be sure, if we see a hard landing scenario for the US in terms of US recession probabilities, then I think that is a downside risk. However, what we highlight in this report that we put out last week, that the sell-off is unexplained by fundamentals, is that even if we went to price in a certain amount of US recession risk, the correction last week is still overdone. Because the pass-through from US recession to Japanese banks is through two channels. It's through the FX and it's through the US interest rates. However, on the FX side, the sensitivity is actually not as high as people expect. It's only a 2 to 5% profit decline for a 10-yen decline in dollar-yen. And as for sensitivity to US rates, the textbook reaction would be narrower US rates if US policy rate would decline. However, this time is unique because in this rate hike cycle, the US yield curve has been inverted, which means the NIM expansion that you normally expect with US rate hikes didn't really happen. So therefore, on the way down for US rates, you also don't really expect NIM contraction. And so therefore, even if we do price in a model amount of US recession risk, we think it's already probably priced in at this point.